Hello, everyone, and welcome to episode of the Markets at a Glance series. My name is Rufus Kamau, markets analyst at FX Pesa. So today we'll be talking about the key events that are currently driving the markets. So we'll be starting with the key events of the economic calendar, and of course we'll be talking about the main event for today. And this is the comeback of the Roaring Kitty, the person who basically led the research into AMC as well as GameStop shares back in 2020, 2021. And now that the meme stock frenzy has resumed, we want to understand what's currently happening and try to understand where the opportunities might be lying going forward for the rest of the day, especially during the New York Open. So once you join in, can they say hi on the right comment section, and this will confirm that everything is working just fine. So hello, Lamik Bwire, and thank you for joining the session. I appreciate this. Thank you for joining Ari. So let's get things started. So here we have the economic calendar, and as you can see, we have had quite a number of news announcements. Some of them with some impact, others with a bigger impact than others. I believe the key highlights for the day has been the UK jobs report. On one side, we saw the claimant count change, which is the number of new people applying for unemployment insurance, rising to 8.9 thousand. But this was much lower than the expected, where the forecast was 13.9K. But then in the previous reading, it was negative 2.4K, which means the job market had been improving and tightening, but now it's getting looser. And with more people claiming for unemployment insurance, you realize that also the unemployment rate is rising from the previous reading of 4.2% up to 4.3%. So the average earnings index remained at a strong growth of 5.7%, same as the previous reading, higher than the expectations. So if you follow these, you'll notice that the average hourly earnings have been increasing gradually since COVID. We had a reduction and then a general overall trend of moving higher. Then we had a drop, and now it seems like this trend is changing and now moving higher. So strong earnings are not very friendly to inflation. So if the average income of the average earner within the economy is getting even higher wages, then they have more money to buy more stuff, which basically increases overall demand, and as a result leads to much higher prices, which we tend to report as higher inflation. So we are seeing unemployment rate increasing to 4.3%. But then the number of people claiming for unemployment insurance is also increasing, meaning these are people who are recently out of work. But then looking at the average earnings for the people who are already in work, they're also increasing. And this is not good for the economy. So if on average, the average UK person is having a 5.7% increase in their salary, and then when you look at their inflation, which was reported at 3.2% in the previous reading, then the real earnings are increasing, which means that people will have more money, more purchasing power, and as a result, the inflation problem might remain higher for longer, which is not good for the Bank of England, which basically means they might have to hold interest rates higher for longer. And with interest rates staying higher for longer, then we also expect to see the pound being stronger for a longer period of time. And that may explain the reaction that we have in the markets. So while we do the technical analysis, we'll be looking at the UK pound, looking at the reaction of the pound to the news, and then we cover other things. So most recent data came up at 3:30 p.m. This is where we had wholesales from Canada. Then we had the core producer price index. So I'm trying to refresh here. So wholesales came in at negative 1.1%, worse than expected. The expectation was negative 0.9%. Core producer price index month over month came in at 0.5%, which is an indicator of future inflation. So this was higher than the expectation as well as the previous reading. And of course, the overhead or the overall producer price index was up 0.5%, higher than the previous previous negative 0.1, and higher than the expected 0.3%, meaning that inflationary pressure is still very strong within the US economy. And it could be a leading indicator of what we're expecting tomorrow, which is the core CPI as well as the overhead CPI for the US economy. And of course, we know that will be the most important news for the week. So the US CPI, which is expected to slow down to 3.4% from the previous reading of 3.5%. On the month, we expect a similar increase of 0.4%. So a lot of investors are basically looking forward to this data, and there's a good chance it will increase volatility for all US dollar pairs, gold, silver, as well as US equity indices. So that's where it is in the economic calendar. As for the day, what we are waiting for the rest of the day is a speech that is just started now from FOMC member Cook. But then the most important speech for the day will be from the Fed Chair Jerome Powell, and this will be at 5 p.m. So he'll be speaking at the Netherlands Foreign Bankers Association in Amsterdam. And of course, we'll be expecting to see audience questions, which is where we get the real spark as he responds to these questions and potentially shares hints about US monetary policy. So that's the expectation for the day. So there will be a lot of focus on Fed Chair Powell's speech later in the day at 5 p.m. So for now, as the US market opens at 4:30 p.m., that should be 19 minutes from now, the most anticipated effect is trying to understand what's happening with meme stocks and why we are seeing stocks jumping 80, 90%, and 100% within a very short period of 48 hours. So this has been the biggest news in the market, and everyone is talking about it. So it all started with something I mentioned on Monday after the leader of the previous meme stock frenzy shared a post on Twitter for the first time. So I'll be showing you that. So the guy is called Keith Gill. He testified on US Senate back in the day in 2021. So he has been dormant for over 2 years. So the last time he shared something, and I'll show you this. Yes, this was his last post on 19th of June 2021. So since then, he has been mute. He hasn't been using his Twitter account. Then all of a sudden, on Monday morning, this was May 13, he basically shared this post. Basically, it's a very common meme. We know if you are a gamer, you would understand this. If you're praying, leaning back to the chair, you're not putting full focus. But the moment you see a gamer just switch to this position, you know that you're in serious trouble. They're about to basically destroy you. So this was shared a lot. And immediately after that, we had a lot of speculation that led to a very strong performance of GameStop shares even before the market opened. So immediately after that, this is what we saw happening. So yesterday, if you look at the performance of GameStop, it was up over around 80%. And then today in pre-market trading is up over 121%. So if you look at the price action over a period of 5 days, before sharing the meme, the stock was trading at $17. Then it rallied all the way up to around $36 before pulling back downwards. And now this is the current price level, which is $30. But then, due to pre-market trading, yes, 30.45 was the closing price yesterday. But now at the open, we expect some higher price action in the stock to open at $67.2. So the opening price is expected to be way much higher. So I won't take much time on GameStop, mainly because we don't have the stock available on FXPesa for trading. So I'll be taking an alternative stock that is also performing really well as a result of the meme stock frenzy. And this is AMC Entertainment Holdings Incorporated, which also performed really well after that tweet. So from here, you can see in the past 5 days, this was the price action. The shares were basically trading flat, and the stock price was around $2.95. So from there, you can see there was a big spike, and the stock closed with more than 100% gain at 5.23%. $5.23 per share. And now with pre-market trading, the stock is up over 128%. So the new opening price will be 11.86. And this is much higher than the price a few days ago, from $2.95 to to 11.86. That is like 500% from the original price. And this is exciting a lot of market participants. So I believe this will be the top trending news in the markets. And I need to shift now to what's currently happening in the charts so that we can visualize and see how we may react to such news. So the dollar index is basically taking a deep dive after the dollar price index news. So this is leading to some major trends happening. For instance, you can see that USDN was making a big spike. Now it's coming back downwards. If you look at Euro USD, it's cruising higher. And of course, after the morning news from the UK following the job market report, there was a big dive by a reversal, and now the pound is strongly headed higher. So we could be seeing the pound headed for the previous high around 1.26334. In this case, a very tight labor market basically implies that rates may stay higher for longer. In this case, we could be seeing the UK pound going for 1.26334 against a weaker dollar. So gold prices have been making a strong recovery after bouncing around this area here. So we were expecting an exact price level around 23.27, but in return, gold did not bounce from this extreme high here. So this tail here served as the support. So remember, support and resistance are not specific prices, but they are ranges within certain price levels. So in this case, we had an extremely focused exact bounce, and now we are seeing gold making a run for it. So there is a good chance that this bullish momentum continues at the back of a much weaker dollar index. You can see the dollar index weakening and now gold making a run for it. But then our focus for the day is on AMC stock. So I believe we should be headed there right away. So I just have to close one of the charts here. So notice that there are two AMC stocks. So there's AMC Networks and there's AMC Entertainment. So make sure not to confuse between the two. So this is AMC Entertainment, AMC Networks. It's also doing well. It's up about 17%, but this is not the stock we are looking for. So we should be looking for AMC Entertainment. So this is AMC Entertainment, and this is the stock we are looking for. So I'm hoping everyone can see this clearly. Just want to confirm this. A good question from a person calling themselves Apple. How should we navigate this back-to-back news? Let's begin with AMC. So you can see the price action on Monday. So price was literally at 2.85 at the close Friday. So market opens with a small gap to the upper side, about 16%, then goes ahead to make a rally all the way up to about 104% before erasing some gains and closing the day at 80% price level. So that was the price action on Monday. So today, because we have after hours trading, we know that there will be a big gap and the price will be opening at a much higher price. So the last price we saw in our AMC stock on the pre-market trading is 11.89. So what we expect to see today is a price action level of 11.89. Just to give you a visual, this is 11.87. This is 89. So we expect the price to open a big gap between these closing prices today and today. So price will be starting to trade from here. So the real question is, once the AMC prices open here, will we see a continuation of this price action, or will the price go back to close the gap? And that's the big question we should be asking ourselves right now. So before we try and speculate whether the price will jump higher or move back downwards, now we try and understand what is currently happening in GameStop as well as AMC shares. So the real thing that is happening in these shares is that they are both experiencing what we call a short squeeze. So a short squeeze is where short sellers in a stock are forced to cover because price is unreasonably moving higher. So the last time we saw this happen strongly in the market was in 2021 during the meme stock frenzy, where this guy, Keith Gill, realized that there was over 2 times the supply of the stock that had been shorted in the markets. So we all understand buy trade and how it works. So if you basically go and buy a stock, you get a share certificate, you have a part ownership in that stock, and then when price goes up, you can sell that in the open market to another investor, and then you sell that at the current market price and you make a profit for yourself. So naked short selling is a little bit different. In this case, you find a person who is holding the shares to the company and you borrow the shares. So let's say you decide to borrow 100 shares and then you sell them immediately in the market at the current market price. So if the share price is $5 and you've borrowed $100 shares, then you sell and you have $500 in your pocket. So if you're speculating that the price will go down, and let's say the price goes down to $2, then you can buy back the 5 shares. It will cost you, the 100 shares. So 100 times $2 will be $200. So you'll spend $200 to buy the same shares and then give back the 5 shares to the person you had borrowed from, and you'll have made a profit of $300. So naked short selling is frowned upon because it takes advantage of much weaker companies. So you're trying to benefit from a company that is not doing well by driving its share price down, and it's often taken as negative. And that's why we saw the Reddit guys ganging up in order to buy the GameStop shares in the previous time so that they can drive the price higher. Remember, for a short seller, they have a target, and the price of a share of a company can only go down to 0. So they have that limit. So if they short a stock, and you can see some of these stocks are trading at $5, $10, $2, $3. So if the stock price really goes down, it can only go down to 0. And then they can buy back the shares that are close to 0, repay, and make their profits. The problem is that the exposure on the other side can be really high, meaning that if a lot of people come in all of a sudden in a market where you are overexposed and you have taken a very big position shorting the stock, and they buy all the available shares, they drive the demand higher and price keeps going up. If it goes up 100% and goes 200%, 300%, there is no limit as to how high that stock can go. So we saw the stocks going up even 1,000% in the previous period. So in this case, if you see a lot of Redditors, we have seen the likes of Andrew Tate going in and buying more of this stock. They know that these guys are standing to lose billions of dollars if the share price keeps going up. So the advantage of a short squeeze is that for this person who borrowed shares, let's say they borrowed the shares at $5, and now price has gone up. We have seen some of these stocks will be opening at $60. In order for them to cover or to repay those shares, they have to buy those shares back from the market at $60. Remember, you sold those shares at $5 and now you have to buy at $60. So in this case, you'll be losing like 12 times the amount you had invested in the first place. So this can bankrupt a hedge fund and investment bank within a very short period of time. So it's a very dangerous game. So the more this frenzy continues and it's being aired on the media and everywhere, the more you will see a lot of investors buying more and more of these shares, especially retail traders who believe they have less advantage in the market. And if this stock goes up 500%, let's say the stock from the current $60 price level goes to 300, then you can see the multiples that the hedge fund will be bound to lose. So we saw it happening with Chegos Capital. They lost billions of dollars and had to close down the hedge fund. And now the opportunity has presented itself where naked short sellers were extremely heavyweight on AMC as well as GameStop shares. And now they are bound to take a big beating. So in this case, the real question is, are these guys going to cover the current price, or are they going to continue holding their position, hoping that the price will come back down? So the idea is, as long as there's more and more people coming in, then some of these guys will be offloading some positions. So what does it mean to offload some positions? So a person sold a share, let's say in this case, we're looking at AMC. They sold here. They were already in the market before the frenzy. So they were selling the share at $2.85. Now the share is opening at $11.89. So they are already down 3x. So if they decide to cover their position, it means that they continue buying the same share. So in a short squeeze, you have investors who are driving the price higher, and the people who are taking losses, in order for them to get out of their positions, they have to buy the same shares in order to give them back to the people who are drawn them the shares, and that drives the price even higher. So if these guys were not able to cover in the market yesterday, then they decide to cover today, it only drives the price higher. So that means that the overall expectation for today is not the price going down, it's actually the price going higher. So the only problem with this kind of scenarios is that prices can be extremely volatile. So if you decide to participate in this market, then you have to be prepared that there will be extreme volatility, and that's price to pay if you have to participate in a short squeeze. But then the potential of making 100% returns within a short period, maybe a day, a few days, or even a week, tends to be extremely high. So that's why I took this specific session to discuss and go through it so that you understand what you are doing. So you can study the 2021 short squeeze that happened in GameStop and shares, see how long it lasted and how fast price retraced at the end of that cycle. So this cannot be sustained forever. At some point, the stock price will come back downwards. So you have to be prepared for that scenario. So I think I've answered that question from the person using the Apple username. There's a good question from Wangari Patrick. Hi Rufus, why is USD still weak even though the producer price index readings have been pretty impressive? Can we expect the dollar to keep losing, especially against the euro, for the rest of the day? I think we saw this happening with the FOMC press conference last time, and it's time to reference that period. Where is that chart? So this is the dollar index. This is the FOMC press conference last time. So immediately before the FOMC press conference, we had seen the dollar index being pretty strong, which led to the short selling at the FOMC, despite the main message being that the interest rates will stay higher for longer. So in this case, we are seeing the market reacting opposite to the news. So news was supposed to lead to a stronger dollar, but then markets had already placed that information, and the reaction after the confirmation of the news was that the market kept moving in the opposite direction before making a recovery. So now we are seeing the market moving lower, and we know that the major news that is coming up will be the CPI on Wednesday. And if the CPI comes stronger than expected, which is what I'm expecting personally, then that news should be able to strengthen the dollar back upwards. So in this case, while the dollar index seems to be moving downwards, at least we should be seeing some form of recovery tomorrow if the inflation comes in hotter than expected. So yes, this is a negative reaction, but at some point, we will see the market making up for it. That's my expectation, where the markets are reacting negatively to good news and positively to bad news. So I'm also wondering why the Canadian dollar has been weak against the pound. Can we expect it to keep losing against the pound? The Canadian dollar has a very strong correlation with Brent oil. So this sustained bearish momentum in Brent oil from a price level of $91.5 per barrel all the way down to around 81. So this is a swing of about $10. has also been affecting the Canadian dollar because it's a major exporter of oil. So whenever you see this kind of trend happening in oil, then it should naturally tell you that the Canadian dollar is also weak. So in this case, we should be expecting to see some form of recovery in oil. And if that starts happening, then that should lead to this recovery in the Canadian dollar. So for now, we're still seeing more pressure downwards, which basically means we continue seeing a weaker Canadian dollar. So right now, the Canadian dollar is strengthening against the US dollar. But then you can already see that we are approaching very important price levels that could be acting as support or major areas of change. So I will be on the lookout for some of these potential areas for a potential reversal in price action. Good question from Buren. What happened to Samson Mzera Friday snapshot? Unfortunately, Samson Mzera left the company, so he's not able to continue with the sessions. Sell the news, buy the rumors. It's a very common tactic whenever there is a strong expectation of a certain news in the market. So, for instance, last time during the FOMC press conference, people expected that the Fed would reverse and start thinking of cutting interest rates early. But then, from what they presented, they showed that rates may have to stay higher for longer because inflation has been quite sticky. And everyone in the markets kind of knew that. So, as a result, instead of the dollar strengthening, we saw the dollar weakening, meaning that investors had already positioned themselves for that eventuality. They had already bought the dollar and they were using the news to sell the confirmation of the news. So that's it from my side. Thank you very much, guys. Thank you for your time. Remember to like the video, share the video with other friends. And I hope to see you on the next session, which will be on Thursday. But remember, tomorrow on Wednesday, we'll be having another session at exactly 11 a.m. during the market snapshot. So thank you, guys, and I hope to see you on the next one.